little bit about, because obviously the tech sector has been a key focus this week. We've been looking at Mag 7, Amazon coming up. There's been a lot of focus on cloud, and Google Cloud, Alphabet fell under pressure yesterday. Part of that was because of cloud. And we were expecting scrutiny because of Microsoft's results and the cloud picture there. So what are your takeaways when it comes to Alphabet and its cloud growth?
So I think it's kind of the same story that we're seeing with Microsoft, which is the business is ramping, but so fast that they're actually capacity constrained. And when that happens, in order to book more revenue, you have to ramp your capacity. Hence the big uptick in their capital spending, $75 billion. Folks were looking for around $60 billion in 2025, so that's another $15 billion. That tells you that demand is strong. And I wouldn't be surprised if we hear something similar from Amazon tonight with AWS.
Yeah. So is there a trend we should monitor in this respect, especially because it seems like more grace was given to Meta for its spending plans when it comes to AI infrastructure than, say, Google Cloud?
Well, I think when you look at, first off, Zuckerberg kind of came out and he tipped that before the earnings announcement. They were going to spend as much as they were. So the market had a chance to kind of wrap their head around that. And even Microsoft, too, they telegraphed that the December quarter, the March quarter would be capital spending intensive because they need to ramp more capacity. They said that back in September. So now we're seeing this from Google. I do think we're going to see it from Amazon. So it tells you that, we are going to see accelerating demand, Marvell, Nvidia, and others tied to.
Reiterating the stock as its top pick, Morgan Stanley pointed out that the DeepSeek sell-off was a chance to purchase. According to analysts led by Joseph Moore, while short-term business was strong, Blackwell supply visibility kept growing, and customer spending intent was evident. Sentiment for the shares had deteriorated on possible longer-term problems. The analysts noted that DeepSeek created certain obstacles concerning export regulations and longer-term investment. They pointed out that it was one of several significant advancements in the field of artificial intelligence that had occurred in the past year. Hyperscale cloud computing giants' reiteration of their substantial data center spending plans this week helped to boost leading AI chip stocks. Following worries last week that businesses could cut down on expenditure after learning that China's DeepSeek had developed a low-cost AI system, the comforting reports were released. Amazon.com, Google parent Alphabet, Facebook parent Meta Platforms, and Microsoft all reported greater capital expenditures for Nvidia, Broadcom, and Marvell Technologies. Late Thursday, Amazon said that it will increase its capital spending by 29% to over $100 billion this year. Alphabet announced earlier this week that it will increase its capital expenditures by 43% to $75 billion in 2024. In its fiscal year that ends in June, Microsoft has said that it will invest $80 billion in the construction of artificial intelligence data centers. Additionally, Meta stated that it intends to invest up to $65 billion in capital expenditures by 2025. The success of DeepSeek's low-cost AI system isn't making hyperscalers reconsider their intentions to make significant investments in state-of-the-art data centers for AI. Investment firm Morgan Stanley released a positive report on Thursday on Nvidia, the leading AI chip stock. With a price objective of 152, analyst Joseph Moore reaffirmed his top pick buy recommendation for Nvidia shares. Nvidia's shares increased 0.9% on the stock market today, closing at 129.84. According to Moore's client note, CapEx feedback from Nvidia's biggest clients reinforced investment patterns and highlighted a persistent short-term supply-demand mismatch. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
What players do you believe are going to be the strongest or remain the leaders in this space?
Well, so from a pick and shovel perspective, it's going to be Nvidia, it's going to be Marvell, and you have to remember, Marvell is not just benefiting from AI and data center, but they're also working with some of these other big tech companies on their proprietary AI chips. So there's kind of a sleeper play here for them.
Analysts predict a 63% year-over-year increase in Nvidia's Q4 earnings. But Wall Street's projections might be overly negative, given that Nvidia CEO Jensen Huang has stated that the demand for Blackwell is crazy. History does not necessarily repeat itself, to be sure. Even while Nvidia's stock price has consistently increased following double-digit percentage drops in the past, this does not guarantee that it will happen this time. It's possible that the company's history of exceeding earnings projections will end. Crucially, Nvidia has never had to deal with the danger that DeepSeek now poses. Expectations of massive growth are reflected in Nvidia's extremely high valuation, with its shares trading at 28.5 times trailing 12-month revenue. The stock would most likely plummet if anything were to sabotage that growth. Additionally, a lot of investors are worried that Nvidia's expansion may be hampered by DeepSeek's AI technology. Among those investors is Aswath Damodaran, the Dean of Valuation, a professor of finance at NYU. According to a recent article he penned, DeepSeek's sudden foray into the AI discourse has the ability to alter the narrative around AI. In the process, it might also alter the plots of the numerous businesses that have profited from the AI craze over the past 2 years. He ranked Nvidia as the company that has benefited the most from the hoopla surrounding AI. Over the past few weeks, however, a number of Nvidia's biggest clients have released quarterly updates. They all intend to raise their capital expenditures considerably, with the express goal of increasing their ability to develop and implement AI models. For those who believe that history doesn't repeat itself but frequently rhymes, this is good news. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Walk us through the economics of Llama. Llama, of course, being their version, if you will, of ChatGPT, except that it's open source and it's free, and therefore it's less clear about how the economics, if you will, work, at least standalone, right? They're using it internally on Facebook, on Instagram, I imagine somehow in WhatsApp at some point. But in terms of what it does long term, unless you think what it really does is just undermine the value proposition of all of its competitors.
Excellent question. First of all, we don't know, and it would be speculation on my point, but we do know that in the past, this is the MO for Facebook. What they do is they introduce a product, they tinker with the product, they seek to get to 1 billion subscribers, and when they do that, they monetize it. And I think that's in the cards. And so I like the opportunity. So to answer your question directly, we have to get the users, then we focus to the monetization bit, and I think they will.
Are there good examples of open source products like this where you think that there's an ability, and when you say you're speculating, where they would charge just for the model itself? Does this give them some kind of entree into the enterprise? I mean, what are we talking about here long term?
So I actually think it'll be not just a consumer product, but an enterprise product, and it could come in lots of different forms. It remains to be seen. As far as their competitor, we saw their competitor make an announcement the other day. The only one of note, although it's not very large but significant in the news, is China's DeepSeek. And the beauty of that model was, they were able to create a competition and spending just 2 months developing it and only $5.6 million. So I think that Meta's doing the right thing. Right. They are spending heavily. They not only confirmed their CapEx for next year, they upped it, but they're going to need that AI infrastructure, not necessarily to train models that'll be passed, but actually run this Goliath enterprise.
For the face of the artificial intelligence, AI revolution, the greatest days might be behind us. The introduction of the internet and its widespread use about 30 years ago started to fundamentally alter the corporate landscape. Investors have been waiting for the next revolutionary invention to emerge and support corporate America's long-term development expectations, even though this change didn't happen immediately. Artificial intelligence, AI, seems to have taken the call after a long wait. AI is giving software and systems the ability to understand, make decisions, and change without human assistance. Given that AI has applications in practically every industry on the planet, it should come as no surprise that PwC experts predict that by 2030, AI will boost the global economy by $15.7 trillion. Nvidia has been the most proactive public business in the early phases of the AI revolution. High-compute enterprise data centers that are in charge of training massive language models and executing generative AI solutions have swiftly adopted the company's Hopper, H100, and Blackwell graphics processing units, GPUs, as the industry standard. However, Nvidia's market capitalization of around $3.2 trillion already includes high growth forecasts. When Nvidia's fiscal 2025 fourth quarter operating results are released after the closing bell on February 26th, there are three very specific reasons to think the company's stock is about to perform poorly. The potential of losing out on important data center real estate from its top clients by net sales is a greater threat, even though the majority of investors have concentrated on direct competitors like AMD. The majority of the Magnificent Seven are creating their own AI chips in-house. These GPUs are far less expensive and do not have a backlog, but they are unlikely to outperform Nvidia's Hopper and/or Blackwell chips in terms of compute power. Future purchases of Nvidia hardware from the most significant companies in America are likely to be let down as a result of this. Over the past 2 quarters, Nvidia's gross margin has already retraced 380 basis points from its peak of 78.4%. Don't be shocked if Nvidia's stock and gross margin are negatively impacted by diminishing AI GPU scarcity and increasing internal and foreign rivalry. To give credit where credit is due, no chip manufacturer is currently anywhere close to unseating the Hopper GPU or matching the processing performance of Nvidia's successor Blackwell chip. But the AI GPU shortage has also greatly helped the business. Nvidia has been able to charge a premium price for its AI GPUs and book orders well in advance due to the overwhelming demand for its technology and the limited availability. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.